All right, folks, we're going to get started. Thank you for joining me. I'm Chris Hutchison with Go Prime Mortgage Amy Bonus team. Amy Bonus was supposed to put on this presentation. She's had an emergency today, but I'm pretty fluid in renovation loans and rehab. So I'll be walking you through today's presentation. Today's presentation is, in fact, about renovation loans. Rehabs, if you will. A lot of individuals sometimes will find on a purchase, find a house that needs some improvements. But a lot of individuals that have purchased a home want to start to upgrade and maybe put a little bit more into their home. It's one of the most powerful investments that a person can make is purchasing real estate and owning real estate. And so improving your assets, improving your property seems to be a really top trend right now. And to help address that, we are going to talk about the renovation loans today. So if I can get the slide to work, here we go. One of the first steps in buying a house, of course, is going to be setting a goal on what you are looking forward in purchasing a house, and also getting a pre-approval from a really good mortgage team. We hope that you find us in your exploits and finding a house to do the financing for you. We have a long time standing in doing home purchases, rehabs, refinances. Combined between Amy and I, we have about 60 years of experience in financing. We got great Google reviews, so if you want to use us, that would be fantastic. Once you get once you make application, we get you pre-approved, then it's time to go out there and go house shopping. And once you get a contract back, then at that point in time, that's when the starting guns go off. And we have about, we have a certain time frame according to the purchase contract in order to complete the transaction. So generally, we never miss a closing date. So that's really good. So we'll start up the renovation portions of this now that I've given our shtick on using us. So what is a renovation loan? Well, a renovation loan differs from a refinance or a purchase. When you have a home and you just do a cash out refinance, you're going to use that current home's equity in order to withdraw cash from your property. And so you're using that as is value as opposed to a completed value with all those improvements. Obviously, if you do a whole bunch of improvements, your property is going to be worth a little bit more than the current as is value. Same for a purchase. On a purchase, you might come across maybe a $300,000 property, but at the same time, you really need to make some renovations to this property in order to be financeable. Or maybe you have a flexible seller that's pretty flexible on the closing date and you got enough time to be able to work up some bids and do some improvements all in one at the same time on that purchase transaction. And right now in today's market, that's rare to find a seller that's going to draw that out for the time period it needs for renovation. But for refinances, your time is endless. It's just whenever you're ready to go on that. So the renovation loan essentially is going to give you monies for the improvements of your property in order to make it what you want it to be, or in order to make it financeable. So on a renovation loan for a refinance, you may be able to roll all the closing costs into a transaction, into the actual loan amount itself. And again, like I said, we're going to use the valuation as if all the work was done on the property. So if you have a $300,000 house and you're going to put $30,000 in renovations and it's going to be worth $350,000, we're going to use that future value, the $350,000, as the determination of how much, as the baseline for the value on how much money we're going to be willing to lend, not the as-is value the way it's currently sitting. And some of these improvements are definitely going to increase the value of your home. Now, it's not dollar for dollar. You're not going to get, for example, a hot tub at 10 grand and pull $10,000 worth of value from that improvement. A lot of different improvements have different percentages on what they'll actually see on an evaluation. Sometimes if you have an agent running by some of these improvements, they might be able to tell you, well, this is what I would estimate on maybe the completion once it's completed. Now, there's certain types of loans. There's conventional, there's FHA. Conventional rehabs are predominantly the most popular of the rehabs. FHA has a lot of monitoring. FHA renovation, essentially, there's a lot of things that go into an FHA loan. And when you have an FHA renovation, then there's a lot more oversight and a lot more costs involved because of that oversight. For conventional, conventional is a little bit easier. You have a little bit more flexibility in the improvements and the oversight and some of those costs. So, whenever you can go with a conventional renovation over an FHA renovation, that is generally going to make your life a little bit easier. But, really the 203K is not difficult. It's just a little bit more paperwork and a little bit more things to do. Now, this is only good, rehabs are only good, or renovations are only good for primary residences right now with us. So it used to be back in the day that investment properties were pretty popular to try to get a renovation loan, second homes. Currently, the market kind of shifted away from that a little bit, went towards mostly primary residences. Not to say that there's not investment home or secondary residence renovation loans that are available, but you're going to be a little bit more hard pressed to find those, and the costs are probably going to be a little bit more as far as interest rates and as far as fees for those rates for those investment properties, as well as for the secondary homes. So now there's a lot of things that can add improvements to the value. Kitchens, outdoor living spaces. Really, the list is really endless as to what you can do. There's some things that renovation loans don't like per se, especially FHA. FHA is really kind of shies away from things like swimming pools and hot tubs and movie stars, whereas conventional, pretty much anything goes. If you think that you want it, for the most part, conventional will accept that. Now, the most popular are kitchen remodels. Bathroom remodels, these are the hottest two right there that are going to add some value to the property. Outdoor living spaces, that is such a big thing. Outdoor living spaces, so many individuals are getting rehab loans to really try to extend that living space from the interior of the house to the exterior of the house, especially after COVID. And sometimes they're looking to create an addition, which additions to homes are certainly allowed. Sometimes your family is going to grow, you're going to get another child, or maybe a family member is going to move in, and you really need to increase that living space, but you don't want to sell your house right now only to find out that what you're going to afford is pretty lateral move. So right now, creating additional living space seems to be the more popular item in the market. Some other improvements, appliances, flooring. 70% of buyers interested in home office or 70% of buyers are interested in home offices or exercise rooms. Because of COVID, because of all that happened the last few years, people really are looking at spending more time at home than they are outside. It's just a sign of the times, I guess. But a lot of them are really wanting to expand a workspace in their house, or maybe generate an exercise room. I mean, who wants to really pay for all those gym membership fees? So other items that they look to improve on, especially for older homes, you start to see some things start to deteriorate in a house, some plumbing, electrical, gutters and downspouts. Really, North Carolina is really rough on homes nowadays. Well, it's always been. We're a really moist state, and essentially it just kind of deteriorates a lot of things. So plumbing, electrical, gutters, downspouts. Also, there's some things that can happen as you get older. You might tend to have some health issues. You can always get wheelchair accesses, safety enhancements for maybe handicapped, widening out doorways inside to allow for wheelchairs, putting in maybe a tub that's accessible for handicap. That's another popular thing. Windows, door replacements, new roof, these are all things that tend to fade as a home gets older. Sometimes you need to see some of these, and you know, you can get a personal loan for it, or you can just kind of wrap it up into a rehab. Walkways, driveways, waterproofing, those are some popular things, and really painting and other cosmetic upgrades. So you really want to see, but in all these, you want to see some sort of value coming out of it in order to increase your future value, in order to get enough monies to be able to work these. Really popular bathroom trends are double sinks and bathroom vanities. It's the most desired bathroom upgrade for today's buyers. That and whirlpool tubs and basic bathroom overhauls. So that seems to be a really popular thing to do. So again, we have some bathroom sinks in this slide. You see, that looks pretty nice, pretty nice. Kitchen trends, big kitchen trends. You know, getting a facelift. After a while, your kitchen tends to get old, or you tend to get a little bit bored with it. Really increasing the appeal of the kitchen by giving it a facelift or putting some backsplash on it. A double kitchen sink maybe, or a pantry. The pantry actually rates high for 81% of the buyers. It's the number one thing that they wish they had in their house was a pantry or a double sink. The kitchen island, adding a kitchen island if you don't have one, and if you do, maybe improving on that a little bit. Maybe concrete countertops with an acid stain on it or such, or even marble or granite. There's this black granite, I think it's called Uba Tuba, one of the most popular granites that are out there. That seems to be a really popular trend. Extra cabinet, maybe some storage space, maybe somewhere to put all that Tupperware you've accumulated over the last few years. And even the fixtures, the hardware, the door pulls, the handles, fixtures such as the sink and the faucets. There's these really cool touchless faucets that you just wave your hand by and it turns it on for you. Pretty good for the germaphobes, especially me. I love it. So there's some other ideas as well in doing a home, such as building or converting home office or workspace. I've seen a lot of renovations that have maybe a little nook inside the kitchen that's set aside for a little workspace for a laptop or maybe a computer, maybe accessorizing the entrance of the home. The entrance is one of the first things that people look at when they come into a home. And, you know, for some people, they want it to be a little bit more grand than what they have going on right now. So you can always accessorize the entranceway, maybe some new lighting, maybe some wainscot, maybe even a brand new front door. Some other ideas that individuals are doing is for landscaping and greenery. That is certainly allowable. If you want to make that back yard or that front yard just look as appealing as possible, maybe for living or maybe for improving for future sale down the road. Improving on the landscape and greenery is another wonderful idea. And then, of course, you have security improvements, putting in maybe a fence, or security cameras, electronics, maybe an alarm system. That's certainly something that you can do as well. Now, regarding expanding the outdoor living space, really popular trends are adding a patio or a defined living space that is maybe brick or some pavers or whatnot. But adding a deck, maybe putting a fireplace with it, outdoor kitchen, that's really cool. Adding a pool is certainly allowable in today's rehab loans through conventional. So you got to be careful with the pool though, because the cost of materials right now are really expensive in order to install a pool, and you might not get that equity out of it. Maybe 50%, 40% of that equity. So really you need to have a little bit of equity that's built into the property to be able to support something as expensive as installing a pool. For refinances, if you have some equity there, then it's kind of built in. When you do a purchase, sometimes you're going to be purchasing at the max valuation. I hope not. I hope you get a great deal on the place, but you'll probably need a little bit more equity in order to stick a pool in there. Hot tubs, those are still pretty cheap. You can get a really good hot tub for about under $10,000 installed nowadays. So, but again, supply and demand. Supply is really rough right now still for hot tubs, as well as the pricing seems to be a little bit on the higher side right now too. So once some of this demand starts to whittle down, once some of the pricing starts to drop down, it's a little bit more palatable. I know I spent a little bit too much on my little hot tub project just because I wanted to have it now. So, if you can wait a little bit on that, then fantastic. You might get yourself a good deal. So pre-COVID, on average, people spent really only about 3 hours a day outside at the most, or a week outdoors. Right now, post-COVID, 73% of people say outdoor space is the most therapeutic that they have, thing that they have going on right now. And people are spending on average about 14 hours outside compared to pre-COVID. That's nuts. It's wonderful. It's fantastic. But really, you can see the difference between where we were pre-COVID and where we are post-COVID. And working from home definitely has aided in the flexibility of borrowers being able to go outside a little bit more, because when you're working in an office, you're really going to be working 9 to 5, right? And so when you're working 9 to 5, you're not going to be going outside all the time. Well, people working from home, they're going to hit the pause button, go step outside for a little bit, and then they're going to be tired of sitting at home. So in the evenings or on the weekends, they're going to try to get out of the house. So you can really see where that additional hours has been coming into play. Top improvements that add value: updating the roof, light fixtures, replacing your HVAC system, your AC or your heating system. That's really going to add some value there. Fix safeties in your safety issues in your house. Those safety issues aren't going to go away. If you have a rotting deck, and North Carolina is really prone to eat away at a wooden deck, those things are just going to get worse and worse. And decks are kind of expensive the bigger that you get. Some other ideas that you can add a phone or charging stations, or upgrade your outlets to have little plugins. Even really adding cameras to it. So maybe you want to watch your dogs remotely from when you go away. Those are certainly things that are popular upgrades. Adding a bench, or really a drop zone or a bench for family members when they come to visit. Putting in personal items into the mudroom, or improving the mudrooms to reduce clutter. Adding additional storage space, that seems to be a really cool trend. Installing a gold-plated front doorknob is not really going to increase your value. And I say this little example is, a gold-plated doorknob might cost you maybe $4,000, but you're not going to get $4,000 worth of value from that gold-plated doorknob. So when you're picking improvements, you really want to find out what is going to add the most bang for your buck as far as future value goes. So be kind of mindful about that. So what is needed on a rehab loan? Let's get down to the nitty gritty. So in doing a rehabilitation loan, you're going to have people that are monitoring the progress of the renovation. There's a little bit of oversight. For FHA, we call those HUD consultants. They're going to be involved in this project every step of the way. You're going to get your bids, and you're going to give it to the consultant, who's going to review it and then make sure that it's legitimate as far as the numbers go. It's not under or over, and he's going to make any suggestions that needs to be done. There may be a feasibility study for a conventional loan. And really what that is that the underwriter is going to take a look at the improvements that are being done to find out, is this going to be able to be done for the price point that is being given to us? And how does it relate to the loan amount? Are you going to be under? Are you going to be over? Do we need another bid that's more realistic than the bid we got from Joe Blow that might have undercut it? Really nowadays, we don't have to worry too much about that, because finding a contractor seems to be the hardest part of a renovation loan. And because of supply and demand again, you might end up paying a little bit more for those items. So definitely shop the bids. Get a couple bids if you can. Shop them around just to make sure that you're getting a fair deal. So a HUD consultant on an FHA loan. An FHA loan, they're going to review the wanted repairs as mentioned and the costs, and they're going to be communicating with the customer as well as with the underwriter, just to make sure that everything lines up as planned for, as far as the customer's anticipation and results of how this was going to be done successfully. That is mostly for FHA transactions. But there may be an overseer or a type of consultant if there is structural work that needs to be done, or it's a really high cost renovation loan on a conventional standpoint. So essentially your bids and your ideas on how you want to move forward and what you want to do is pretty much going to necessitate whether somebody monitoring the transaction or not is going to need to be needed. So, and there's fees for the HUD consultants and for these consultants, not just HUD consultants, but any consultants. They charge a fee for that. Now that's rolled into the total cost to build. For example, if you have $50,000 rehab and these guys are going to charge $1,500 in order to go out there maybe once a month and check the progress and report back to the underwriter. They're going to give us what their fee schedule is, and then that's going to be added to the total cost of the rehab. So instead of $50,000, you have $50,000 or $51,500, including the HUD consultant. So now a general contractor sometimes is used to oversee the work as well. So on conventional, we might have a consultant that is actually a general contractor. So it's not saying that we have to use a HUD consultant. It just depends on the situation. Now, you're going to pick plans, or you're going to get a bid from a contractor for any type of rehab. Now, there's a vetting process that us banks have to go through for that contractor. We're not just going to let Joe's contracting service that just started up yesterday with no history of actually doing any renovations or construction work. We're going to vet those out for you. We need to approve the builder that you're getting set up with. And there's a little bit of a process there. They're going to get their information off to us, which builders are pretty familiar with this type of renovations. They haven't had to deal with it in a couple of years because really it's been mostly spec building is what they've mostly been concentrating on. But as the market tends to slow down a little bit, you're going to see more and more builders available and more of them willing to do custom construction or remodeling. So again, we're going to have to approve those builders. So you'll basically get us in touch with the builder. We'll reach out to them and get the necessary information, make sure that they're insured, make sure that they're bonded, make sure they have the experience and that they're working with this on your bids just to make sure that those are all buttoned up tight. What you're also going to need are plans, blueprints, if you will, if needed, and specifications. Here's the scope of the work. Here's what we're doing. If you're taking out like a wall, or if you're putting an addition in, then really you're going to need the blueprints or the drawings in order to accompany the plans and the bids. So we're going to want to see, here's what's happening, here's what's going to be, here's what the remodeling or here's what the construction is going to consist of, and here's the cost, and matched up with your bid to show those two together. Sometimes an architect or an engineer is involved. When you're moving a load-bearing wall, you might end up needing to get an engineer to make sure that removal of that wall is not going to affect the structural integrity of that home. So anytime that you have something structured, then we have to go a little bit further deep into that. There is a draw schedule. So how does this all work? How does the contractor and you get your money? Well, at closing, we will issue out up to 50% of the materials on the first draw, not the profits, just the materials. So if you need $20,000 in materials up front, we're going to issue 50% of that, which we'll cut a check off to the contractor for 10 grand. And they'll get paid the rest of that on the next draw. And there are usually a total of about 5 draws that are involved. And for each phase of the construction or the remodel, we're going to have the consultant or we're going to have the appraiser go out there and check the completion of what's been done so far and report back to us. And then whatever has been completed, we're going to issue a check out for the work that has been done. And you're going to get 5 of those draws that are set out up until closing. You know, and generally at closing, we'll wait for, I think we get out to about 90% of the finished construction. And then at that point, we'll wait for the final as-is re-inspection saying all the work was finished, and then we'll cut the remaining funds off to you and the contractor. So there are a few draws. Sometimes the contractors don't need that much. If it's a really light project, sometimes it's only going to be 1 or 2, and then they got done real quick, and then you're moving on. All right, so a rehab, some points to consider. A rehab is not to start over on a house. A renovation is to improve an existing workspace, not to start over. So in tearing down existing rooms and tearing down existing structures, there needs to be some sort of a semblance of the old structure still standing in order to get a renovation loan. Anything past that, if you're going to tear down the place, it's really going to be a construction loan. That construction loan is more what you're going to want to focus, because when you tear all that stuff away, you just have the infrastructure and the land, that's it. So really you're starting from scratch. On a renovation loan, we're using the existing structure plus adding the improvements to the existing structure. Now, like I said before, you can have additional living space added. You might need to knock down a few walls in order to do that. You just can't tear down the whole thing. So, and I think the scope of the project in relation to what the value will be when you're done will pretty much determine whether the job is going to be feasible as far as a loan amount standpoint against the valuation, when it comes in appraised at. Another thing to consider, no self-help. Sorry, everybody wants to do a little bit of their own work just to cut some costs. Unfortunately, John Q. Banker, such as myself, we don't have the time in order to do that. And there's a time frame that you need to complete this renovation loan. So what they found out back in the day, and this is well before the housing crashes, there's a lot of self-help renovations, a lot of self-help construction. About 60 to 70% of them ran behind when you had self-help. Well, why is that? Well, that's because everybody thinks that they can do the job. Well, that's cool if they can, but everybody thinks that they have the time to do the job. And that's a big sticking point right there. If you have kids, if you have dogs, if you have a side job that you also need to do in addition to your main job, you just don't got the time in order to maintain that time frame it takes in order to build. So really the industry has gotten away from self-help on those rehab and construction loans. Now, you might be able to talk a contractor into letting you do the paint, but remember that the contractor is responsible for the paint. So he's going to be owning up as far as the quality and the workmanship that's been done on there. So if it hasn't been done to the consultant or the inspector's liking, then that means that you might end up having twice the expense for the contractor to go back out there and have to fix that problem. So as we stated, we need contractor bids, but a lot of contractors are going to basically lump everything together. You're going to have kitchen remodel. Here's a dollar price for that. You're going to have renovation of the pantry. You're going to have a dollar price for that. Really, it needs to get broken down into material cost, labor, and profit. They have to itemize that out. You know, really, contractors don't like to go too far out there when it comes to showing you what their labor is. But in order to find out what the actual material cost is and the actual labor cost is, and that's going to pretty much net what that profit is going to be, right? So those contractor bids really are going to have an itemization, and that's to help not only the underwriter determine, do we have enough funds to be able to make this happen? Is doing a kitchen remodel for $30,000, is it actually $30,000? Or is it $40,000? Or is it $20,000? The breakdown of the material costs is what's going to help that. Also, the appraiser that goes out there who's assigning the value, that guy is going to need to know what those costs are as well. So, all right. Well, good idea to speak with Amy or Chris, me, on the amounts that are going to be needed as far as the loan amount goes. Start working on finding a contractor if not found yet, and get a preliminary number from them, and then come out and talk to us, and we'll try to fine tune that bid or that job. So there's other ways to be able to access cash in your home. Cash out refinance. Maybe you don't want to do a rehab. Maybe you have some equity. We can do a cash out refi, and you can have total control over everything and skip all the documentation, skip all the process. Another idea is to borrow from your 401k. You can borrow from your 401k for the projects and maybe refinance later down the road, or buy the house and borrow from your 401k and then try to recoup those later on down the road. Another option is a home equity line of credit. You might be able to get a home equity line of credit. It's kind of like a revolving charge card. And then at that point, you can pretty much have control over your project yourself. So I'd like to thank everyone. I am going to figure out how to unmute everyone. And if you have any questions, please, or if you can unmute yourself, ask me a question. And then I do see Josh has a question. Are 203K renovation loans considered conventional, or are they their own category? Josh, thank you for asking me a question. FHA handles the 203K. 203K is kind of the code word for the FHA renovation loan. Conventionals have their own type of renovation loan. FHA 203Ks are their own product. And the FHA has a little bit more involved as far as consultants, things like that goes, a little bit more in the bid process and the approving of the builder. But FHA is very flexible, or a lot more flexible on things like credit and some other items that may be conventional. The conventional has their own strong suit as well. They're really high credit score assets related, and FHA is lower credit score, a little bit more flexible in that aspect of it. I hope, does that answer your question?
Can you hear me?
I can, yeah.
Okay, so I'm on my mobile, so hopefully it's not too bad. So yeah, that does make sense. I appreciate you answering that. So in your opinion, what is the benefit of going with a 203K over like a conventional? I mean, what's the biggest, what kind of person would really need this over just a conventional? Is it because there's more, you're planning out the process, the timeline a little more, or is it more secure? What's the biggest benefit in your mind?
I think the better product between the two is the conventional. First of all, you're going to have a higher loan amount. The loan amount cap is a lot higher on 203Ks. The benefit for using an FHA 203K is if you have somebody that has to go FHA, and that would be more towards the credit aspects of it or the debt ratio aspects of it. Maybe their debt to income ratio is a little bit on the higher side. FHA is a lot more flexible when it comes to that. If you have a perfect credit borrower, got assets in the bank, really conventional is going to be the direction that you want to focus in on. There are some things that the FHA doesn't like. They don't like pools. They don't like some landscaping. There are some limitations to the FHA. But if you're looking at just rehabbing a home, and you'll get a better deal through the FHA 203K as opposed to being that perfect borrower conventional wants. Not that you have to be a perfect borrower for conventional. But sometimes it makes more sense to take a borrower FHA than it does conventional due to their circumstances.
Okay, yeah, that makes sense. I appreciate you answering that for me.
Of course, of course. Any other questions?
Actually, I do have one more if I may ask one more.
Please,
This is Josh
please.
again.
Yeah.
So like for smaller projects, like, you know, like a $200,000 house that only might need, you know, 10, 20K, maybe 10 to 20K max put into it. Maybe you want to do some stuff on the kitchen, maybe do the cabinets, maybe work on like an extra room or something in a bedroom.
Right.
You know, and the future value goes up still, but it's like, is it still worth it to do a 2 or 3, or is that more going to be like conventional?
Well, there are two types of rehabs, both for conventional and FHA. There's a simple one. It's under $35,000, and there's over $35,000. So the process is a little easier for under $35,000. And so there's not as much oversight. There's a lot more oversight when you have 35,000. But the way the market is happening right now, in regards to interest rates going up, we're at top value right now on purchases. If you're thinking about buying a house, trying to squeeze that 20 grand and the rates that are involved, rates are a little bit higher on construction and renovation loans. I think you as the consumer have to evaluate, is that 20 grand worth it to you, as opposed to just working on trying to get some financing out of the regular purchase transaction. Now, if you have a lot of equity that's involved, if you currently own a home, it might actually benefit you if you want to go down that road. 20,000 isn't a whole lot because of the fees that are involved. So I would suggest get your bang for your buck. Go 30, 35,000, or maybe even 60,000. If you're going to drop some money for the cost it takes just to refinance or just to purchase, I mean, there's costs involved no matter which route you go, no matter where you go. Make it worth your while. Do the things that you want to do.
Right. Yeah, that totally makes sense to me. And it's just interesting right now because, you know, even considering like townhomes, you know, townhomes right now, because our market is so it's still kind of in a seller's market, you could say, still in some ways.
Right.
But the townhomes, man, because our stock is so low, they fly off the shelves, man. You know, a couple of years ago, they're only worth 200 grand. Now they're worth 330, 350.
It's
So,
nuts. I would have never thought that, but I'm thankful for that, but I would have never thought that.
But anyway, those are the kind of things that a lot of my clients are looking for, is those ones that, you know, it's a good buy. You can get it for a good price still,
Right.
but the future value is still presumably going up, you know, I mean, just, you know, based on where it's at,
Right.
everything looks like around it and what the stock available is in town.
Well, the tough thing on purchases is that when you have a purchase and you have a rehab, then you really need to have a seller that's going to be flexible and waiting for the bid process and the approval process to happen. So when you have a purchase that's, you know, within 30 days, that's great. But when you're trying to find a contractor willing to do the work and it's taking you weeks, your seller may not be as flexible as your buyer. So.
Very true. Very true.
All right, guys, any other questions? Well, I'd like to thank everybody for being here. I'm sorry Amy Bunis couldn't share with you. Amy Bunis, one of the top loan officers here in Wake County, and in fact, as far as I know, in North Carolina. We would love to reach out to us if you do have any other questions. You can reach out to me. I'm Chris. I'm the team lead for the Amy Bunis team. If there's anything that we can do for you, please reach out. No question is a silly question. Everything is important. And we look forward to hearing from you again. Take care, folks.
Thanks, Chris. See you later.